Move on to the markets in Nigeria right now. The NSE All Share Index is currently trading flat, and this year it's up about 6.2% for the quarter rather, and then 38% for this year. However, many analysts are predicting that the index could close the year below the 39,000 mark as trading activity gradually slows down on the bourse. Let's now cross to the NSE, where Andrew Saku, an analyst at Investment One Research, is standing by to talk us through the day's trade and recap 2013 and what to expect in 2014. Andrew, thank you very much for joining us. So let's start with today's trade. Recently, we've seen the market really in a range, really. It hasn't really moved out of that 38,600, 38,900 band. So your thoughts about where the market is right now?
Yeah, okay. The market, like you said, has been trading sideways so far as today's trade is concerned. We've seen slight gains at the beginning, but as of now, we're beginning to see some slight moves towards the negative territory. However, the dominant players so far on the positive end, or that should have impacted the market positively, are basically the banking stocks, but we've also had a few of them, particularly First Bank, for example, trying to weigh down on the index. But again, that's totally not out of expectations, because essentially what we're seeing is some people, will be trading for the season, kind of. But by and large, I don't think overall that the effect is anything to worry about.
All right, let's talk about where the market is headed into next year and the best opportunities that you're seeing. Let's start with the banks, and many people talking about tier 1 banks is the safest place to be. But then if you look at their performance this year, it's pretty mixed. Most of them have underperformed the market though. So going into next year, do you agree that tier 1 banks are where we should be putting our money?
Well, of course, you've got to do the assessment of the banks or the banking sector as a whole in the context of the dynamics that have transpired within the current year. Do remember that up to last year, a number of actions were taken that kind of gave the banks some level of leverage, which enabled them to generate so much positive gains as far as their financials are concerned. So last year you possibly saw gains of 20 to 30% growth, and that is because banks were repositioned for business going forward. And this year we couldn't have expected as much performance, even though overall they've done fairly better. We've seen growth in the region of 8 to 10% across for most of the banks. A few of them, of course, underperformed, the likes of Sky and Access, but that also tied into their projections because of the kind of changes that were ongoing in those institutions. So if you take the numbers overall, I think the banking sectors did fairly well in 2013. A few challenges, of course, permeated the landscape this year. I talk about the CBN effect of the CRR. That impacted on the banks negatively, and that affected their bottom line. But I think by and large, the banks have begun to restructure their view and their business scope. So going into 2014, the only other way they can actually look into is to see what areas of business they can do outside of total reliance from government sources of funding. So if they're able to weather through that, obviously they should be doing better in 2014.
All right, perhaps the banks that are distinguish themselves a little more in terms of trying to diversify their funding base and play in the retail space. Some of the tier 2 banks like Diamond Bank. Diamond Bank is up over 30% this year. Your expectations for the tier 2 banks in 2014, do you think that we're going to see this outperformance within the sector continuing next year?
Taking a peep from Diamond Bank particularly, Diamond Bank has, over the years, tried to restructure itself as a retail bank, and that simply means that they'll be able to access cheaper funds from the wider reach of the society. And if a number of them kind of typify into this kind of drive, I expect that they should relatively do better. A few of them still have challenges in how to ensure that they penetrate the market significantly and in proportional direction. But to the extent that they remain dependent on government sources of funds, that will turn out to be a key liability on their part, because they will have to pay a lot, trying to keep those deposits. Right. However, if they're able to diversify, their sources of funding, that certainly should give them some level of leverage going into 2014.
Right. If we go outside the banking space, though, your expectations for non-banking companies, the industrials, for instance, many people suggesting Dangote Cement may be a good play for next year. And if you stay in the consumer space, there's that sentiment that they're a bit pricey, generally speaking, although there could be a couple of opportunities in that space. So in that space in particular, those two, industrials and commercial and consumer goods companies, what are your expectations for 2014 and which are your best ideas?
For companies like Dangote Cement, they will continue to remain key player in the landscape, industrial landscape particularly. We saw very robust figures coming from Dangote Cement in the course of this year. One can only but look forward to greater performance from Dangote Cement. I think they have shown over time that it's a stock to watch, and my expectation for Dangote, for example, for year-end and into Q1 is nothing outside of the region of 215. It has not actually reflected its current performance, as it were, in the direction one would have expected for current earnings. But it's a stock for tomorrow, and I think it's also a stock for now. A few others in that sector will certainly do better. The consumer space also provides a good opportunity for investors, the likes of NASCON, Nestle. Nestle actually has returned over 200% in the last 1 year. It still has got potential for growth in terms of capital appreciation. So investors will want to keep an eye on such stocks.
All right.